Let's talk about trading indicators. Here we see the example, the divergence between the indicator and the price. What we see then, we should find the entry points in these areas to open short position along the core trend. So it's better use this tool on higher time frames for investing or positional trades. These and previous indicators are relevant to scalping and intraday trading. You should first of all understand the most important idea. Indicators are not the main analytical tools. Entering a trade on the signals of only one indicator is an unprofessional approach and mainly shifting the responsibility for your trading. Another important fact is that currently anyone can create their own indicator and put it on TradingView. Most of the indicators are built on the basis of mathematical algorithms that take into account previous data, for example, the opening and closing prices of candles. Another one important aspect to understand and which is confusing for many traders is that indicators work great on history. In fact, many indicators redraw their signals after you enter a position.
What the fuck is this?
I don't know.
Let's see how it works on history. Let's take, for example, this indicator, Nadaraya-Watson envelope, and divergence indicator. We see red and green arrows for sell and buy signals correspondingly. We really see that on history it really works well, as well as the divergence indicator. Here we see the signal for short, the workout of this signal, and every single moment it really works well. And this fact attracts the beginners. You see the signal for entry, you open the trade, however the price still hasn't reversed and hit your stop loss. Then the signal is redrawn and the price finally shows the reverse and follows the indicator's scenario. The reason is that the indicator algorithms are based on historical data, but it doesn't take into account such important factors as the current activity of market participants, the location of large limit orders, large players and manipulators, and so on. All these factors should be seen by the trader. As far as we are trading futures using leverage, it's quite dangerous to rely only on indicator because they provide many false signals with redrawing. That should be sorted out. The indicators indeed sometimes can really work well, but on the proper market stage. One or another indicator can work really well in a certain phase of the market. In this video, we will discuss several most reliable indicators. However, I should introduce the order and priority of analytical tools application, where indicators occupy the last place in the priority list. First of all, we should have graphical analysis, using price action, searching for local patterns, and so on. Then order book analysis. Then we should try to search for entry point in the order book, and finally additional analytical tools include Fibonacci levels, indicators, and so on. There are several indicators that we usually use as additional analytical tool. The first one, moving averages. We can add them here. Simple moving average, 2 times. Here we set the length 7, blue color. Here we set 14 with a red color. We use 7 and 14 lengths of moving averages for scalping, for intraday trading, and 50 and 200 for long-term investment, more relevant for higher time frames starting from 30 minutes. Here we see how those two moving averages are crossing each other. In these areas we have entry points. For buy, when a moving average with lower length crosses another one upwards, and for sell when it crosses another one from top down. As far as this instrument is additional one, we should conduct the analysis and have clear setup in advance, with understanding in which point we will enter the trade. That factors facilitate our decisions in the order book, and only then we get confirmation from the indicator. Stochastic, another indicator that should be used inside a flat or range. There are two crossing lines. We consider the signals where lines are crossed but only above this level, 80 I mean, and below 20. Above 80 we search for sell signals, below 20 we search for buy signals. In other words, we search crossing line signals in oversold and overbought zones. These and previous indicators are relevant to scalping and intraday trading. Look at this, it works good, but anyway, we're watching this only on history. In this point, we should enter short position, and as you see, it works well, 3%. Or for example, here we should open long position, and it works well. But it works well, as I said, only in combination with other factors. Let's imagine we entered long at this point. After opening the position, the price goes against us by 0.5%, and only then we see the growth. RSI indicator. The Relative Strength Index RSI is a momentum indicator used in technical analysis. RSI measures the speed and magnitude of an instrument recent price changes to evaluate overvalued or undervalued conditions in the price of that instrument. Generally, when the RSI indicator crosses 30 on the RSI chart, it's a bullish sign, and when it crosses 70, it's a bearish sign. However, we recommend searching for convergences and divergences between price and indicator line. There is an example, the divergence. Here we see the price maximums are increasing, while on the indicator the maximums are decreasing. Finally, the price follows the tendency displayed by the indicator. However, the signals in that case have quite long-term lag, and usually such signals used in positional trading, because the amplitudes made by price before the reverse in this case could be quite broad. So it's better use this tool on higher time frames for investing or positional trades. Indeed, it works. It usually provides the signals quite rarely. However, it works. We see the decrease of maximums here and increase of maximums here. And in this point, the price follows this tendency, the tendency of indicator. So combining this analysis with other factors like huge limit orders, like different strong levels, it could be really good analysis with a pretty high probability of working out. Another indicator that works on the same principle is MACD. Here we also looking for divergences and convergences that work very well. But if the first two indicators at least somehow applicable to scalping, then this indicator is also more suitable for positional trading on time frame of 15 minutes or more, using minimal leverage and fairly large stop losses. Here we see the example, the divergence between the indicator and the price. What we see then, the price following this tendency. It reverses. Another example, here we have the convergence. Minimums are decreasing. Here we see minimums increasing. Then the price indeed reverses. The best way to use this indicator is to find the entry point along the trend after short correction. Here comes the trend, downtrend movement, correction, downtrend movement, correction, then downtrend movement, correction. So we should find the entry points in these areas to open short position along the core trend, because the trend is your friend. Here we see the increase of maximums. What we see here, the sharp decrease of maximums. Finally, in this area, we should find the entry point in the order book or find some other maybe graphical patterns on lower time frame to short from this position with the stop loss above this trend line. So we should enter the trade using this indicator only in case there are some solid arguments for entry graphically or in the order book. Now you can try to have a practice with those indicators, find some entry points and do it on practice only if there are some more arguments in the order book, points of control, limit orders, participants, and so on. But be careful and use only very small values.